YouTube check 1 2. YouTube check 2. Check 2, check 3. Yo. Check 1, 2, check 2, check 3. Please let me know that you can hear my voice in the chat this time around, team. Now that we're combining the video and the feed, actually both feeds, you can hear. Nice. Okay, good deal, guys. Good deal. Good to see everybody back in. Okay. Let's not be so hidden in the dark here. I tried to create this like, you know, thing, like this color palette, you know, on the walls. Could you tell? Does it look like it's several colors? Jeez. Oh man, to create the little ambiance, right? So people can what is it called? The audience retention, right? Man, that it requires some attention, right? But all good. So he's showing the tacos, right? Because my boy already knows. Oh, dude, good times indeed, brother. Good to see everybody in. Welcome back, master students, to the Scalpers Market. And this is week 1-1, as we actually successfully missed the last lecture. And, you know, the little guy is actually good to go this time around, right? He's not sick. In fact, he's actually right behind me, right? He's playing you know, the new Mario Maker 2 or something like that. And he does seem to enjoy that. So that's good. We got him kind of chilling there. All right, guys. So this I'm gonna ask it again, but just because I know that I'm handing myself kind of an obvious answer here. But what are we gonna study? What chart are we gonna study the local liquidity on, guys? You let me know in the chat below what ticker you want me to go. I know, but the answer probably is already. But please let me know in the chat below, guys. Go ahead. The question is, what ticker, as in, do you guys want Tesla, NVIDIA, XRP, if you want SNDK, what are you guys thinking? I'm already getting some answers so far, guys. So let's go ahead and find out, right? We got 2 suggestions coming on, guys. Any more suggestions? Let's go ahead and put them in the chat now, guys, and we'll go ahead and get this thing rolling. Gar, what is up, my brother? Good to see you there. What I'm thinking I'm going to do, dollar bill, is that Home Depot? Vato Depot. Yeah, man, you know how it gets. You know how it gets out there in the outsides, man. You can hire a guy to do whatever you want. That is terrible, bro. Oh my goodness, man. Like I'll literally tell this, hey, bro, you know what, man? I'm trying to hire you for something. He goes, yeah, what kind of service you need? Well, not really. I need you to cook something for me that is Mexican. Are you down? You know? And then it seems as though you cooked it for your date. Oh boy. Oh man, the chances are that guy knows how to cook those chances are pretty high, man. Guys, I'm just kidding. Hey. I know how to cook. You know, in Spanish it's called sazon. Okay, I got sazon. All right, guys. So you know what? Yeah, I know, thoughts, right? That's how you maneuver the system. No, not even like that. What I'm gonna say, guys, is that we have a lot of good suggestions here, including HBAR, including SPY, right? MU, Home Depot, and oh man, Westo, Adam. That's oh man, I haven't heard of that in such a long time. I remember there was a different name of the company was a different name than the ticker, right? Could you remind me the name of the company? Because I remember Atom was the ticker name, right? Is that the case with this? I'm having trouble remembering it. No, it was I think it was Matic. I'm getting it confused with Matic. And of course, guys, LPS coming in with the silver push. And let me see. Actually, did we get other suggestions above that? This right here means XRP. Okay. All right. I'll tell you what. What I'm thinking I'm gonna do throughout the as we actually get better at identifying these levels, what I'm gonna do is this is not gonna be a quiz, but it's gonna be more of like a challenge, individuals, right? And it's gonna be by participation. So like you can if you want, or if you don't want to, you don't have to. So yeah, there we go. Cosmos, nice, nice, nice. Yeah, Cosmos. It did have two different names, huh? So what I mean by that, guys, is that I'm looking to see if I can create these little versus challenges to identify the areas of liquidity faster and faster. So kind of to train our eyes to identify it quickly, and to try to force it in there, to try to force that view quickly, so that you can understand what it means to actually identify these levels as they appear, or as they become relevant or appropriate. So with that said, I'm not going to look at a chart at the very second. I'm going to introduce you guys to remember that the scalpers market is based around key concepts that I teach all over the master's course, guys. And remember, the master's course is your beginners is 9 weeks, your strategies it's 18, 19 weeks long, executions right around there too. It's 16, 17, 18, 19 weeks long, and then your conditioning would continue into those 8 to 10 weeks as well. So there's key concepts that scalpers and day traders, momentum traders alike, use from every single one of those segments. So for those of you who have already participated in the beginners into strategies into executions into conditioning, you're gonna catch not repeats, but kind of a uh preview, or reviews, right? They're gonna be in a sense reviews. Thanks, Panda. Exactly the word I was looking for. So yeah, with that said, guys, this I think I'm gonna look for an image here that's gonna benefit you. Hold on just a quick sec. I'll just pull it up here. Just a moment. Almost done gathering them, team. I'm gathering a few pictures here. Okay, team. So let me know if you can see that picture. The picture on your screen. I think I prompted correctly. And it should be the image of someone diving into water. You guys see that, right? Okay. So let me go ahead and now prepare a chart here on any of these. You know what? Actually, since that actually would be pretty ideal to use something that's kind of active, and Atom or H bar, either of those would be good. But and I will say this, guys. Let me know if the tickers you chose earlier, like the silver, the MU, Home Depot, are those that we should be looking at in the market prep as well. And if it is so, no problem, team. I could go ahead and add it into there. Okay. Okay. So I want you to go ahead. That one too, brother. Yeah, that we're gonna gather that list and we'll do it like we'll do it up, brother. Of course, no problem. Thank you, man. Okay, so I'm gonna go ahead and point out a couple of things here, specifically to what I want you to kind of see here is uh, perspective, right? It change the way that you silver for the market prep. Gotcha. SPY 2, right, guys? Should it be that we can shift or modify the way that we see price action, and we may be able to highlight for ourselves a more actionable type of execution condition or strategy, right? So see how price action feels like it bottomed out here. So the weekly time frame is what you're looking at here, meaning that of course you guys should already know that your candle, right? Your candle lasts just a week long, and its lifespan is that of that span, right? Check it out. It says right here, 4 days and 21 hours left for this active weekly candle to close. So it's fluctuating in real time. Now, I want you to think of these areas where we're clustered completely, right? So many candles kind of trapped in one area here called a consolidation range or a chop box. And you can see here that there is this moment where we create this, massive bottom. You create that huge high, and then this thing kind of just drops into a crazy abyss, right? Now, the areas that price action, the areas that price action tend to fall into, they're usually not random unless price action is absolutely and truly in what's inside something that's called price discovery. Price discovery can be found to the downside where there's no historical supports, no previous price action in the levels of which we're diving into, and or going above, yeah, equally as such. So if we're going way above, price discovery can be found on the upside just like that too. Except that would be it's not too popularly known, but it is something that you can identify as blue sky territory, clear skies, right? So nothing above as far as historical pivots or historical price action there. Nothing at all. In this case, we're lucky enough to see historic price down in these levels. So this makes these bottoms, specific to this here, which was a 183 or whatever that is, in this bottom here of 180. These make it, it makes it predictable that we can find bounces from areas that we've seen before. It's kind of like a traffic light, or it's kind of like a crosswalk. We know that that's the area where we kind of stop at, right? And we kind of join everybody there, and then we all make that intersection function. So in this case, we're lucky enough to see that we touched down on this area here on January 20th. This is the week of January 26th, 2026. And prior to that, this was December 15th, 2025. So it has just a little over a month of play. So we were there just a little over a month ago, and we come and kind of observe where could it be that we can find some support. So we just look to the left and we find this area here, right? So that's what makes it confluent or confluent. That's what price does. It tends to rhyme. Now, but there's a problem here, though, right? There's a problem with this area, because why would it be that we can touch this low? How come that would? Why? There's always that potential question too. So with that said, we probably have to look back a little more. Now, it's not what I'm going to tell you now is that the price action that you found going a little bit lower doesn't mean that there has to be something there to rhyme historically. This is a random walk. Mathematically speaking, a random walk would be something that is truly chaotic, to the point to where randomness becomes absolution. So that absolute randomness presents no structure whatsoever. So true chaos lands in a random walk. So now in this case, we'll go ahead and kind of line up a trend line just like this. If you're curious how I did that, just click on your chart, right, with your left click, and wherever it is that you want that line to be drawn, Alt plus H for horizontal, or Option H on Mac. Okay. So as we draw this low, we can kind of see that on a macro time frame, on a macro, right? This would be a weekly. There's nothing really to attach in there. Now, certainly we could probably find something on a smaller time frame, like your daily time frames. The smaller we get, the more obvious the probabilities are. Right? Even if we get into a 6-hour time frame, then you're going to see that, oh, well, you know what? Now, of course, we have that many more chances of reaching a solid, candle like this one here, right? It's super close to it. So that's what I mean. But relative to your macro time frames, where things should really be observed for these kind of macro drops, like the one that we just saw here from Adam, then we're going to notice that there's not really anything to kind of latch onto, right? Just like this, it really just dropped into a random zone. So let's go back to the weekly and draw ourselves an overall zone that can probably highlight the efforts of most of the candles here. So I would say that it would be something like this, right? And also that bottom area probably wouldn't do it for me. This one, I think I would probably draw something back here. So I would say that it would be something like this, right? Now, something like that, why? That's because we're coming so close to some of these lows here. Now, as you can see, these weekly time frames do showcase some other targets as well. For example, this one, I'm going to adjust it to that point there. Cool. But now what happens if I adjust it there? Since price action is coming down into that area, right? Maybe I can adjust to what's coming before that zone. So before it, since we're going down, I'm going to go ahead and just maybe highlight this and say that this could be a probability. Okay, cool. So if we're going to take that same approach, right? If we're going to take that same approach, then maybe we can also do it to this downside too. And we'll go ahead and put it at the closing basis of this red candle. Right. And now that I'm observing, a second look into this, we have this like difference here. I think I'd probably like to just kind of split the difference between that in a very discretionary manner. Not to say that it's mathematically, suitable or whatever, but it just is what it is. I'm just adding a little bit of discretion into it, because there appears to be some kind of a random factor to it. So now we can observe the probabilities of a zone, historically speaking. This is from 2019, September, and these lows down here are actually from 2020, March. So I'm not looking at this bottom side just yet, right, guys? Because your primary bounces That's what we're looking for. Your primary bounce happened here first. So this was a huge bounce. So the bigger the reaction, guys, the better the support, which means should it be that we fail this massive reaction here, then we absolutely have reason to come back and test this area here. Now, what I ask my students all the time is, how do we invalidate that thesis? What stops price action from reaching this level here? So naturally, I'm going to start getting this answer. Well, there's a weekly bar low right there. That seems to be the reaction for this gigantic upside. So naturally speaking, we're just going to go ahead and leave this here as liquidity. Not saying that we're going to reach it because we're like in a $2 zone here, 209. So that's, 60 cents on something that moves 14 cents a day. There's got to be something seriously wrong. Okay, so now let's go ahead and take a look based on these areas that we chose. Let's go ahead and take a look at how price action behaved over here. Okay, so it looks like based on history, we did okay, right? In coming down to this area here and bouncing, even in this zone here. So now that we know that we have these two potentials, we can then create a zone of, a focus, right? And that would be something along the lines of this. And now this focus would be also embedded within a larger area. And this area would be the total zone, okay? So this total zone here would mark off the area of high probability for liquidity, okay? And now we're going to go ahead and identify exactly what that means and how we can work it or make it actionable for us. Okay, team? So this naturally becomes the zone of interest, right? With a potential liquidity bottom down here. And that's typically how I find these areas, right? You can find your macro liquid zones like this, and that have everything to do with historical price. Okay, but why is it a zone? Aside from the obvious, aside from the very obvious that it's this low here, I get it. But that also is weird. Look at the long wick, right? And then we're also kind of within these, let me just kind of bring this over here, right? And also in here too, right? Look at the amount of like huge wicks that we have to the downside. So everything there, that's what makes me think, okay, well, it is a zone, but the zone shouldn't just be looked at from a technical perspective to identify targets that are just built around a historic price. You have to use your imagination. We have to work our visceral abilities. And if we could put an imaginative touch into it, apply that discretion, that discretionary imagination, the fun behind it, then you might be able to think and re-gear your mind into something a lot greater. Okay, now I heard this guy kind of yell behind me, team. Let me just make sure that hold on just a moment, guys. Now, what I mean, let me get myself here. Now, what I mean by something that can be, imaginative, more powerful, something fun, something that you can use as an actionable strategic method to identifying these areas here would actually be through the use of a little. Don't let this sound daunting to you, or don't let it sound overwhelming in any by any means. It's by using a little bit of logic mixed with physics. Now, I know you're gonna get the what, bro. Why you got to bring the rocket science up in here, man? It's not really like that, team. It really isn't. So let's go ahead and refer to this image here and take a look at this. Now, the the whole perspective here is to understand that liquidity, the word itself, liquidity pertains to an area of concentrated buyers. Now, in this case, we're talking about the downside, right? Because price action is dropping into key zones, into support zones. So that support zone would have a pocket, or it would have a pool of liquidity, meaning that there could be a space anywhere between target A, target B, and in there is a bunch of people within that bracket of prices, right? Everybody's trying to buy, covering their short positions at that zone, concentrated within that block. Now, that block is called the liquidity pool. So this block isn't a random place. This is just like we talked about in like an intersection, right? Where everybody kind of gathers. So if it is an area where everybody meets, how do we predetermine that we can land there? Well, knowing that nothing is certain, right? And using probabilities here really kind of highlights the use of statistics and the fact that it is just a certainty, right? And it's not I'm sorry, it's not a certainty, it's just a probability. It's everything aside from being certainties, right, guys? We're not certain about things here. We're only using the data. We're only using the knowledge here and some discretion to understand where that bottom could be. Now, the way that we can add a psychological reason would be through the means of a formation, right? So should the formation or a pattern like a dead cat bounce or whatever, should it signal that there is a potential rhyme with that bottom side target that appears to have a lot of liquidity in it, then that's a good zone that you maybe kind of want to bet on. But again, that's just a guess. It's your discretion. Remember, the more concentrated the area is, the more action there is there, the higher the probability is that price action can prevent any continuation, either downside or upside, based on that thick zone. So as a diver takes off a plank, right? The diver takes off a plank, creating a certain height. So he weighs a certain amount, and he jumped a certain height as well. Now, that height against his weight makes him drop at a rate as well. The speed in which he drops into the water creates the amount of depth that he'll eventually reach as a bottom side, right? So as he dives in, we create this this tear through the support zone, right, into an area that probably has a deeper depth, right? And price action starts to what appears to be leveling off. So price action drops into the liquidity pool, right? Literally drops into the liquidity pool. And as you drop into that pool, things start to kind of balance out, and you start to reaccumulate being the upside. So as soon as you're in that liquidity pool, then you start facing that whole turnaround. So whatever that depth is to that point to where there's a turnaround, there is a way to determine that exactly. Guardian, kind of like Netflix right now. Right at the support, slightly under, like, dude, it's horrible. So that can be figured out. That can be figured out through some very light mathematics, and some of which are actually just given to you. Like for example, on let's go ahead and take a look at this here. Like for example, data cells, right? So how would that tell you though, right? Because let's see if we can go to an area where it's just one candle. There we go. So this is just one 3-week candle, and let's see. Hold on, let me see if I can to do this from a smaller candle. Maybe that would probably be the best way to do it, right, guys? Oh, we have one on the 5-day too. Good stuff. Okay. So yeah, I think I'm going to use the 5-day because it is one solid candle and it's already kind of finishing. 20 hours to go on that. Okay, so check this out. The 5-day candle has the ability to move. Data Cells is telling you here that this 5-day candle can move on average 37 cents any time that the 5-day time frame can open. So if remember, the opening valuation on a red candle is the top. So this thing opened right above here at around 210.92. In fact, we could actually just determine that quickly. Up in the OHLC, opening would be the O, and holding this, it says 210.83. Okay, so it opened up at 210.83 right up here, right? And it says on Data Cells that your current average true range low would be around 174.16, of which the candle reached a low on the OHLC on the L of 180.35. Now, remember that it's not based around the statistical number. That's just an average. What we're doing here is understanding that price action, should it have historic value, maybe there is a reason why it stopped over there. But we also determined that that could have been an area of just random noise. So in reality, then what could it have been? This is what you would do in this situation. Your concentrated pocket being this zone that you chose earlier, based on what's already existing, of 180.29 to 186.18, because we know that we dropped that low, you wouldn't do that. You would actually put this to the 174 value of the statistical side, because we don't have actual price action that's tangible here. We don't have anything that's grasping that real target. So 174.16 is what we're going to use here. And that, I'm going to show you something right now, guys. Hold on. There you go. So now that we used this 174.16, miraculously enough, that turns into the perfect 50% distribution of the area that was already there that was used. And I tell you guys this. Okay, guys, remember, I say it like this, right? Here are your top side targets, right? And always mind your what. Let me know in the chat below if you know what I say when I say that. Go ahead, team. Please participate. Let's do it. I draw your targets, and I always say, always mind your when I draw the zone. Do we have the final answers? Hit it, guys. Hit it, hit it. I assume that's the final answer. It's 10 seconds here, guys. Give it a shot. And time is up. Guys, excellent answers. All of the answers that you gave me are correct. But the one that I typically speak of when I come into these liquidity zones or support zones, I always tell you, okay, here's your top side, here's your bottom side. Always mind your 50%. Always mind the 50%, guys. And that actually gives you a lot of information, right? And good job, guys. For those of you who got a Panda Guardian, good job, team. Everything that you said, guys, is also correct. But always mind your 50%. Okay? So this new area that we actually drew based on mathematics and discretion just turned out to be perfectly the area that we would use for support. So that's awesome. Okay, now this answer was given to us, right? This bottom side target was already given to us. Please remember that we actually just had to look at our data cells, and that had it for us. And all we had to do was really look at a time frame that has an average true range similar to these bottom sides and historically speaking. So all we had to do was look for a time frame that had that. Why would it have to be like that? Why would it have to be that we have to look for a random time frame and see if it actually displays a target that's similar to these targets down here? The reason why is because should we find a larger time frame candle like a 5-day with an average true range that has that low and it has enough time left in the clock to reach it, with validation of direction, we can certainly see how time can cascade all the way up to a 5-day time frame average low. So the target, though, the 180, why, does anybody have an idea why we didn't go all the way to the statistical side? Because remember, it's still, look at this. This is your area here where we found that there is literally nothing here, right where it stopped. There's literally nothing there to stop price action from continuing to lower. This is literally a slide. Why wouldn't it just go down all the way to 150? Because that's actually the zone that we could actually find the biggest bounce from, secondary to this one here. So can I get another round of answers here? Why do you think it stopped at that point instead of going all the way down? And also, why wouldn't it take the 174 if the 174 is statistically viable, right? Because that's the average. So why did it decide this target rather than this one, or all the way down to the 150? It could have done it. Can I get an answer, please? Let me know. Get creative. And I say this all the time. I want you to remember it, because every time I stop you, and then every time I put this magnifying glass over you, it's going to be easier for you to grasp it and also record it and forever remember. Why did price action stop at this zone here instead of going down to the statistical area of 174, or even it had every freaking reason was available for it to go down to 150, momentum and everything. momentum and everything. So why would it stop 6 cents short of its 5-day range when it had all that opportunity? Let me know in the chat below, guys. Let's go. Remember, there's no confluence at that 180. There's nothing there to rhyme, right? The last target here, guys. Remember this. The last target was, in fact, right here, 183.34, and then before that, just there's nothing. But this is the beginning of the trade here. So look at this. This is the 180, and there's literally nothing historically stopping this thing from just going all the way down to 150. That's my question. Why would it stop there? And I mention this to you all the time too. So get creative. Let me know. Why did price action stop there? There is a there's a very obvious answer there. Why did it stop at that specific target? That's a good answer, Guardian. I'm not gonna lie, that's a good answer, right? But it's not it. That's not it. But remember, use your imagination, and also it's more than likely that answer is more obvious than you think. It's very, very, very simple. Let me know if you need a hint, but go ahead. Why did it stop at that instead of the 174, instead of 150? Hit it, team. Hit it. Guys, that's good. That's good. Keep on going. But I really, really think that you can be more clever than that. Come on, let's go, guys. Push it, push it, push it. Think. Look at everything, everything, everything. Should we throw in a hint? A's in the chat. Okay, let's throw in a hint. All good answers, team. I like the answers. But here's the hint. What target is it? Read the number to yourself. What prevented 174 from hitting? What target did it hit? What is that called? let's go ahead and put it here. Because the answers that you're giving me, guys, those are all right. Every single answer that you provided here, they're correct, right? The thing is, yeah, there's no confluence on this. There's no there's nothing at 180. There's nothing there ever. So, and there is stuff, yeah, no support. So that's the question. Why did it decide to stop at that level? And I tell you guys this all the time, right? Of course, for those of you who don't trade with me all the time, I understand completely, right? But for the students and also for the people who do trade with me live every day, this is something that I mention all the time. Should we just go ahead and release the answer, team? A's in the chat. Panda, your call, buddy. If the answer is 174, why did it stop at that other level instead? Being that it doesn't have any support anywhere. It's completely empty. And I bet you the ATR was also incorrect. Why? Because the 5-day itself is giving you the answer too. The 5-day has a 174 low, and this stopped at 180. So why was it that it stopped there? All the answers you've given me, Wesso, everything that you gave me is correct. But there's one that leads all. There's one. Dollar Bill, elaborate. Let me focus on you. Go ahead. LPS, you are in what is it called? You are in focus now. Explain. Dollar Bill, is that your final answer? That is the guys. Options, this guy seriously needs to be in like a freaking multi-billion-dollar market making position. This guy's crazy. You're not going to find many guys like that, team. Thank you, brother. That is an absolute monster answer for the team. They should know how that works. Dollar Bill giving me the final answer. Now, LPS, the market respects certain levels because of liquidity, orders, and psychology. That is absolutely correct. Price action stopped at 180 because it's because it's the number. It's 180. Remember, I tell you, focus on your 5s, your 10s, 15, 20, right? 25, 30, your whole numbers. There are certain exceptions. When we have the potentials of hitting an average true range of maybe 170, let's think of this. 177 to 183. That leaves the 180 in the middle. So that means that in that case, you may bounce off the areas of 183, right? So 183 becomes a very powerful target. Let me show you. Here we go. Okay, now check this out. Oh, guys, can you see the target? I'm sorry, can you see the chart now? I'm actually, now, I just changed to the chart. I was talking to you first. Team, let me know in the chat if you can see the chart. Yeah? Okay, perfect. So the exception here would be that if we had an like a 183 target based on our zones here, then that can be an area of rejection. But that still leaves the potentials of just the why not thesis. Remember the why not thesis. If we're already there, then why not just hit it, right? It is important for us to kind of determine things like that too. So if we have the 183, then that becomes a potential for us to bounce. But if it's 183 that we have in there, that also gives you the room to reach the solid number, the whole number. What target do you think this is here? This one. Hold on. You guys see it? There is something about that we tend to respect and we tend to move around with. When there's a solid number, there tends to be threes in between, which becomes like 3 or 6 or 9, right? But in reality, I would prefer to observe the 3. So meaning that if we're in the hundreds and we're moving into, if we're moving into 100, then 97 and 103 become your resistance. If we're moving into like 500, then still this would actually move into your 470 to 530. And now I believe that we can still respect that even into 1,000, because it wouldn't really shift until maybe 1,000. Maybe 10,000. So we would reach your $1,000 and still respect your $30 range, 970 to around 1,030. The high that NVIDIA made when we were running into $1,000, the high that it made was roughly around $968 or $971, right around there, before it capitulated around 60 to 80 points, maybe 100 points, and then reverted all the way back to clear your $1,000 zone. Does anyone remember that happening when NVIDIA was running and everybody, that was the talk of the town? That NVIDIA was going from its 300s, from its 400s, month and week after week after week. Let me come back to the chat. Option saying, yes, this was when One Good Trade was talking about NVIDIA. Yeah. And Quinn didn't believe him. He didn't believe. So, yeah, because it was just worth so much money. So this thing ran and ran and ran. And we stopped right at around that 970 point in that multiple of 3. And you know what? You know what? Do you guys know how many trading days there are in the market? Put it in the chat if you know how many trading days we have. No, not that one, not that one. So those are days in the year, but how many trading days do we have? That's excellent, Panda. That's right. We have 252 trading days in a year. So, hold on, guys. Sorry, team, hold on. Interesting, right? The average. Neil, remember the February. It's just it has to fluctuate. But typically speaking, we have the 250. Literally the 249 to around 252 trading days on average. So the 252 is often observed because it can be you can, I believe it's, yeah, you can you can multiply it using a 9. You can do it using a 3, right? So if that's the case, then there's got to be some kind of thing there, right? Because your 9 times 28 becomes around 252, right? So what is there with the whole 9? Well, there is, guys. It's I'm not going to get into your mystical things here, okay? But there's a whole belief behind the multiples of 3s and 6s and 9s in the market, and it is right. It is pretty nice and confluent, right? Your EMA 9 tends to be a very powerful thing because it's in the powers of 3. So if we have the 9 EMA, then we're going to go ahead and use your what was the one beyond that? Um, Hold on, guys. I don't use moving averages anymore. You know, uh, it would be the 3 fits into 7, 3 times 7, right? So 7, that would be your 21. So the 9/21 moving average strategy is a very strong strategy for day trading. So should your EMA 9 cross above your EMA 21, then that's a bull signal. Should the EMA 9 cross below the 21, it's a bearish signal, right? So there are many things that can give you the the probabilities of continuation. Use also the triangle formations in trading, right? Triangle formations have, of course, right? You have the three sides to that. So, and it just, remember when I say this, your triangle formation just so happens to be probably the best performer in the trading world. Crypto, equities, currencies, commodities, right? Futures, indices, bonds. Man, you could chart the 10-year yield with that thing. He loves the 9/21. Yeah, the 9/21 is a mathematical thing. So that's what I'm trying to say, guys. It's just there's a whole thing with 3s. And can I take you into another direction? Because it isn't only, this doesn't pertain only to the trading world, the threes. When you're talking about threes, it also belongs to hit songs. Like for a basic example would be like Justin Bieber's "The Baby, Baby, Baby." Oh, right. So you have the power of three using the baby word in a chorus that tends to repeat 3 times throughout the song. So the pattern is massively repeated all over us. So it's just up to us to be able to use it to our advantage. And that's why I tell you guys, heads up, if we're looking for a target of $100, first of all, start looking for resistances at the $97 target. 97, should it beat it, let's go ahead and reach into your $103 target. Should we extend 113? Just by default. Because that's where humans like to take things just without us even knowing. The problem is not that we take it directly to that target. We're not purposely selling at 113, or we're not purposely selling at 97. We're not. Is that the balance of people selling at 92, at 93, at 90, 96, 99, 100, people selling at 105, 107s, 110s, 101, 103 in a repeated fashion, and continues within millions and millions, or thousands amongst tens of thousands and hundreds of thousands of participants in the market, average out to be the 103 to 97 as an area called a spread. Psychology plays a massive role into this. So knowing that truth is how this is how I'm going to create these little challenges within us to identify the higher probabilities of support ranges should I ask you for them. So if I say you have 10 seconds to identify macro liquidity on a chart like this, I would love for you to just go in and get it. Where is it? Locate it. Even if it's not exactly on the target, that doesn't matter, is that you know where the pool is. And understanding that will make you do this, will take you out of the 1 minute from massive grain, right? It'll take you from the 1 minute. It's going to put you on a daily. So the daily, you're going to think to yourself, there's too much grain here. I can't really see. So that's going to take you into the weekly. And you're going to think to yourself, there's still a lot of grain here. I still can't see. So that'll take you to the monthly. And you're thinking to yourself, okay, this is probably, maybe I can do this here. Let me just out of curiosity, let me see the quarterly, right? Okay, all right. This validates a lot of what I was talking about. So if I use the quarterly chart and I'm going to determine what the macro bottoms are, then you're going to notice right away that you have all these confluent targets everywhere down here that are all similar to each other, creating the liquidity pool right in here. So if that is something that you can identify quickly like this, then you would be able to identify many other zones on the way there. These two candles, opening and closing, highlight the opening of the closing of this one, the low of this wick, the opening of this one, all together in one shot. All that crap there. Then you're going to notice to the upside that you have even more confluences everywhere that you look. What is that macro bottom right here? Why would that be there? And there are other candles that are resisting at that point too. So if we put it there, what can that be? Well, I wonder if that is a perfect 50% distribution of this area here? Oh, crap, it is. Because if we just get rid of these lines here that we identified the targets with, you'll see that there's your 50% right at that same place that we just found it, right there. Interesting, right? Well, this is what marks off. This is what kind of makes one trader stick out from another one, is that your ability to identify higher probability zones like these makes your edge absolutely sharp. Understand that the more that the target is used, if it's used a lot in history using macro timeframes, that's your major supply. That's your major support, right? Demands can be found in these areas like this, which can prevent price action from continuing to the downside. Should your average true range signal 174, you already know that the strategy is going to be 180, right? So should you signal an upside target that's 200, you know your strategy is already 197, 203. Using this kind of discretion, guys, puts you a level above, because you're not relying on one target. You are relying on a psychological probability of reaching a zone where everybody's kind of at, which allows you to enter strategically. Of course, it's not perfect, but it's high probability. And higher probability is what we trade and what we look forward to. That is it for today's lecture, guys. Please let me know if you have any questions in the chat below, in the comments below. And yeah, but I hope you guys are enjoying this class, team. Still remember that we have one more of these scalpers market that we're gonna do here in the OG pit, and all, and or the trading floor in the main ARCa bulls section. So yeah, guys, I hope that you are liking this, team. This did take some time to kind of prepare, but all good in the hood, right, team? So if any questions, guys, go ahead and present them, but class is officially over. I'm here to answer anything, guys. Should you be interested in this class, please reach out to me. I'll still give you, guys, with whatever questions you have. If payments are an issue, whatever, just let me know, and we'll work it out. Okay, team? So just remember that I will honor the end of the year special for you guys on this. It's 14 weeks long, and we're starting with the bear thesis. Okay, team. So if there are no more questions, guys, let's go ahead and scooch on out of here and get ourselves ready for the market prep and see what is up. Let me know, team. All right, guys. Thank you so much. So let's go ahead and close up shop here, team, and get ourselves ready for the market prep. Thank you, guys. Have a good rest of your night, and I will see you here in just a few minutes. Guardian, love you, buddy. You're very welcome. No problem, guys. Appreciate you stopping by. I hope you guys are enjoying this. Good stuff, team. That's right. Keep learning, guys. Never anything wrong with that. Love you, team. Neo, love you, buddy. And thanks for participating, brother. You're very smart. You're a bright guy, man. You keep it moving, team. Okay, guys. Then I'll see you soon, team. We'll go ahead and post this up in the ARCa bulls, down here in the ARCa Masters course content. I'm pinning all these lectures in there, guys. There's other lectures too. Okay, guys. Old man, love you, buddy. You be safe. You take care. People's J, what's up, buddy? Oh, nice, man. Thank you, buddy. Thanks for tuning in. You're welcome, dude. No problem. All right, guys. Let's get ourselves ready. We got to find out what's going to happen with the little guy here, and we'll move on. Thank you, team. We'll get together to record that XRP, and then we'll do our typical market prep. Got to look at silver, got to look at SPY, all the other tickers that you mentioned, too. Love you, team. See you soon. Bye, guys.